I've been doing some reading on reports and fixated on this terminology that's being used by Nomura, talking about a demand cliff. Can you give us what is your outlook for the second half of the economy?
I won't say it's a cliff, but it's definitely a softening from here on. I think there is a lot of policy sensitivity towards a severe weakness in the economy. So I think to the extent that we are seeing a bit of a wobble in the data, a bit of a slowdown in the data, policymakers would really react quite quickly, I think, under the circumstances that we see now. So I think in Q3 and Q4, we should expect that the economy will start to soften. And part of that is driven by the fact that export as a spectacular growth engine would cease to be the same. It will cease to provide the same strength. We're also expecting that things like industrial production, which is mostly driven by exports, would also taper down a little bit. So I think, given that, the kind of momentum in the economy should start to slow, but I don't think it will still materially below, say, the 4% handle. And what that means is that for the year as a whole, we should expect growth to reach at least, the high 4%, nearly 5%, which is in line with the target that the economy has set.
And we also now have a scenario looking at the June data that industrial production is growing 6.8%, much higher than retail sales. So in this case, is there, a surplus of goods that can exacerbate the problem of concerns about cheap Chinese goods flooding overseas markets and being a source of trade friction? And what can the government really do about this overcapacity issue?
Well, I think it's interesting, right? Because we look at industrial production, which is growing at 6%, 7%, and we look at the industry the industry inventories, which is also growing quite spectacularly. So there is significant stockpiling in the economy, which means that either there is an underdemand or there's an oversupply. That has a very significant deflationary impact on the economy. The way it transmits most evidently through the economy is by undermining profit margins of companies, of manufacturers, and that in turn affects things like labor markets, job wages, people's livelihoods. I think that's gonna be something that President Xi and his top leaders will be looking out for. We've seen increasing narrative coming out of Beijing, really that kind of deflationary spiral. I think policymakers are quite increasingly sensitive towards that. So I think the problem of stockpiling, the problem of oversupply is not going to go away, especially given that the external environment becomes more challenging. If you look at yesterday's trade data, for instance, we are seeing an increase in shipments to places like the EU, to North Asia. Part of that is front loading, but part of that might just be Chinese pushing out some of these oversupply of goods. If that's the case, that's going to cause trade frictions at a time when the Chinese wants to position itself as really a champion of globalization.
And to what extent, and how does the issue of China's pivoting to high-tech manufacturing really factoring into all this with the oversupply question?
That is, I think, one of the silver linings here, right? So by our estimates, things like advanced manufacturing, high-tech manufacturing, electronics, for instance, all these sectors we think contribute about 20% to China's growth last year. That's a significant amount. Not as big as the drag that property has on the economy, but significant enough for the economy to, eventually over the next few years, potentially have a positive growth driver. The positive thing, the good thing about this is that the Chinese, because of years of industrial subsidies, of very positive government support into these sectors, have really emerged as a strong competitor in the global landscape when it comes to some of these products, which means that their products in these areas, if you think about electronics, if you think about smartphones, these are not easily substitutable by other markets, which necessarily means that, even if you have high tariffs, the demand is going to stay more or less resilient. Now, of course, if you have tariffs in the 40%, 50%, that's quite punitive, and that's going to undermine demand. But by and large, we're seeing Chinese goods, especially in the advanced manufacturing sector, being quite price and product competitive. And that's going to lend some support to exports, at least in the medium term. So that's one positive thing that we're kind of looking out for that could provide some tailwinds to the economy in the second half of this year.